Good morning, everybody. Happy Thursday. It's March 23rd, 2023. Great to be with you today. My name is Bob Lang with ExplosiveOptions.net, and today is our Thursday edition of the Daily Bites, or as we like to call it in basketball, March Madness. It's Sweet 16 day, first day of the Sweet 16 all weekend long. So very exciting about basketball tournament. So let's talk about charts though for a little bit and talk about markets. Of course, yesterday we're going to get into that in just a moment. Quite a reversal of fortune yesterday with markets heading higher at the start of the day. They pulled back and then they went right up after the Fed announcement. Started making new highs during the day and then got pounded on some words from Chair Powell. Went back up and then came back down again later on to finish on their lows. So today, what do we have? We had futures up about 18 handles on the S&P 500. That's a little bit less than 0.5%. The NASDAQ doing a little bit better, almost 1%. Dow's up a little bit as well. Russell's up a tiny bit. VIX is coming down a bit here. We have the VIX still in kind of bullish mode here with the VIX down below the VIX future. VIX future is rather high, and that one expires in April. So we'll see a little bit about how that materializes here. Of course, one of the reasons why the VIX fell sharply was due to the fact that people were getting ahead of the Fed meeting yesterday, Monday and Tuesday, dropping volatility quite sharply. And we saw markets rallying in front of that because they didn't want to wait until the Fed announcement for volatility to drop. So they started, let's go ahead and sell volatility a couple of days early and see if the futures can take off as well too. So anyway, we'll see how things go today because, of course, the drop yesterday put the S&P 500 down below 3950. If we open up here today, we're going to be above 3950, roughly about 3955 or something like that. So that's kind of been an area that the stock market has been hanging around. Of course, Nasdaq's been a little bit stronger than the rest this year for all of 2023. But I think we really have to pay attention to what's going on with the markets. Let's first talk about the Fed and what happened yesterday. All right. So as you can see from this chart, this is a 5-minute chart of the S&P of the SPY from yesterday, and you can see when the Fed announcement hit, we took off, came back down, and really took off again, and then all of a sudden we started falling over here. Why did we start falling? When the S&P SPY was hitting over 402 or so. Chair Powell came in and answered a question from the audience and basically threw cold water on the notion that markets are expecting rate cuts at some point in time in 2023. And really basically the market is trying to push the Fed to see it their way. Chair Powell basically said, I don't see rate cuts happening at all this year. So which means the Fed funds rate at 4.75 to 5% is basically where we're likely to finish at the end of the year. Now let me put this up here for you. Federal Reserve website here. Hold on, Federal Reserve. So yesterday's meeting had a statement and a set of projections as well too for the rest of the year. So they do these projections every couple of months. December was the last one, and this one is for the rest of the year. So the one thing that stuck out to me was that the Fed. Well, first of all, the Fed funds rate, they're projecting 5.1, right? Well, we're currently at 4.75 to 5%. So my guess is that we raise rates one more time in May to 5 to 5.25, and then probably pause from there. Maybe a rate cut later in the year if the economy starts to erode. That would be the only thing, along with inflation starts coming down at a much swifter pace. But notice here, look at the GDP, change in real GDP. So in December, they were projecting for all of 2023 a 0.5. 0.5. That's it. Not even a 1% growth rate. That's anemic. Real GDP growth, they're saying, is now going to be 0.4. So they've downgraded the economic projections for growth, increasing a little bit in 2024. But again, look, they've downgraded 2024 from 1.6 to 1.2 and picking up to 1.9 in 2025. Still a rather small. This is well below trend. Okay, anything below 3% growth, 2.5%, 3% is below trend. Projections for inflation jumped up as well for PCE. Unemployment rate down a tiny bit as well. So everything is not good according to these projections from these economists. Here's the dot plot down here, and you can see that we still have somebody up there some people up there in the 5.5% range for Fed funds rate, maybe even higher than that into 2025, right? One guy has got a dot all the way across to sees high interest rates on the Fed funds into 2025. Most everybody else is down over here, so this kind of skews it a little bit. I think probably the central tendency here is probably down to about 3% in 2025. So we're not going to see those rate cuts probably coming at the earliest in 2024, and then maybe if things are settled down a little bit with inflation, down in 2025. So the Fed statement here said basically that they're going to continue to monitor things with the banking situation, but I think that they feel comfortable that they've done enough over the past couple of weeks to ring fence that problem. Also, they'll be watching and paying attention to more of the data, the inflation that's been rampant here more recently. In fact, even look at in England yesterday, 10.4% increase in inflation over there, and they just raised interest rates this morning, 0.25%. So it's not, it's something that we've had to deal with here, and it's spreading around the world. So the United States, the Federal Reserve has to continue to lead this campaign to snuff out inflation. Some of you may have noticed that gold is shining bright. I think that's one of the reasons why there's some uneasiness around the markets around the world here, is that maybe inflation is not going away. And I think that gold is signaling that. Gold and silver have been up sharply for the past couple of weeks. Gold and silver are precious metals that are hard assets away from fiat currency. And if inflation is not getting better, it's not improving, you're going to see the currency starting to drop. Yes, the euro and the dollar and the yen are all starting to drop, and you're going to see more of a flock towards hard assets like gold and silver. Let's take a look at a couple charts over here. The SPY yesterday, and you can see again, we can see this thing just got drilled towards the end of the day. We came up over here. We tested that 200 moving average on the 5-minute bars, and we closed right on the dead lows of the day. And again, here's another chart that I shared yesterday on Stock Charts TV. If you haven't a chance to watch that interview I did with Julius de Kempenaar, it's really, really great, really fun on Stock Charts TV. That's called the segment's called the final bar. So I talked about this in the stocks above the 50-day moving average. This is one that I like to share a lot as well. So when we're above the box, that's good, right? But when we're below the box, we're spending a lot of time in below the box, below the 50%. That's no good. And we started to make a run above here, and we got rejected down here, and we're down at 22%. So 78% of stocks are now below their 50-day moving average in the S&P 500. 78%. That's a lot. That's a big number, right? And even though markets are up, it just means it's being carried by a few issues, a few big tech names that are above their 50-day moving average. And maybe they're above their 50-day moving average because the 50-day moving average is kind of flattened out as the stock's gone down, stayed down, and all of a sudden you get a little lift above there, and you're above that 50-day moving average. So it's not really convincing to me that condition is solid here. But still, only 22% of the S&P 500 stocks. So that's about 110 issues out of the 500 that are in bull markets. All right, and I'm going to go back to the go back to the futures over here. We're up about 22 handles. Let's take a look at the oscillators here as well. As you can see here, the McClellan oscillator, NASDAQ minus 127. We're back into the moderately oversold condition here. Price oscillator also went down below zero, went down yesterday below zero. Then New York Stock Exchange oscillator minus 104. And you can see Bollinger Bands expanded yesterday as well too, as the range expanded. I wanted to show you this, the daily chart of the S&P 500 here, as it really is important. The candle that was created yesterday. Look at that outside day, right? Outside, we had somewhat of an inside day. We almost really even covered Monday as well too. But we are still up for the week. We finished on the S&P. Let me look at S&P 500 here. We finished on Friday at 39.16, and we're at 39.36. So we're still up about 0.5% on the week, but still, that outside day is really telling. We're red on the cloud. We closed below the cloud yesterday. We tried to make a move above that 50-day moving average, and we're rejected. And we landed literally right on the 200-day moving average, which is at 39.34. So until we get a move above there, sufficient move above there through that 50-day moving average, this is just not this is going to be a very, very tricky market to play. So it's going to be it, everyone. Have a great day. Have a great weekend. Trade carefully today. Take it slow. Have some protection on. I complained about people who weren't having protection on yesterday, and it certainly helped out towards the end of the day having some of those puts on. I even said yesterday that puts were really rather cheap. They're not expensive, right? If you can buy some cheap protection, if you're wrong, it's not going to cost you very much. But if you're right, it's going to save you on a day like this. Have a great weekend, everyone, and I'll see you on Monday. I have always thought